Hey everybody, it's Rob from VRA Realty Alliance. Today I'm coming at you with the 4 different types of loans you can use to buy a home in Pennsylvania. I'm talking with mortgage broker Sean Maloney. Let's get into it. Hey Sean, how's it going, man?
Hey Rob, how are you?
I'm good. I wanted to do a talk with you today about if I'm, let's say, a home buyer. What are the type of loans that we can use to buy a home?
First time home buyers, you got your FHA loan. There's a VA loan if you're a veteran. There's a USDA loan if you're buying a rural housing. Both VA and USDA are both 0% down. And then there's a conventional loan, which can be as low as 3% down.
Got you. So I know from my experience, majority of my transactions tend to be either FHA or conventional. Tell me a little bit about why you would choose one or the other.
Basically, FHA allows for a lower credit score. It's less money down. You can get a 6% seller assist as opposed to a 3% seller assist with conventional. It's more forgiving on your debt to income ratio. You can go up to 56.99% on the debt to income ratio, whereas with conventional, you can only do 50%. It's for people that might have a lower credit score, need to save more money going into the house, or they make less money or have higher debts. So that's why you would use FHA. Conventional, it's for somebody who has a better credit score, doesn't need any type of help, or needs less help getting into the house, and has a good amount of money saved up.
FHA, you can have a higher debt to income ratio. Explain that a little bit.
Your gross monthly income versus your gross monthly liabilities.
So that's like gross is money before taxes, right? How much you make
Yes,
before taxes. So
that's
if I
correct. Yes. So if you make $10,000 a month, and then your monthly debts they all equal up to, including the mortgage, 5,600. That would be your max allowable for FHA. It's 56%. But if,
Gotcha.
if, it were, if it was for conventional, then your max allowable would be 5,000.
Okay, and credit score wise, I know people are always curious about what credit scores do they need for the different loans.
Every company's different right now. Before it was pretty uniform, but when it came to COVID, it went higher. Now it's going back down. Typically for FHA, you're looking at about FHA and conventional. I think you're looking down to 620, and then USDA is 640, and then VA. Actually, I'm not sure off the top of my head, but you can just assume it's between 620 and 640.
Gotcha. I know a lot of people like will go on Credit Karma and look up their credit score, but don't you guys use like a little bit different of a credit scoring system? Is that true?
Yes, we do. Yeah. So we use more of a FICO based. So what you see with Credit Karma is more so your credit score, whereas we go with a certain type of scoring for FICO. So whenever people tell me, "Hey, I looked at my Credit Karma," and I let them know like, "Hey, it's actually not going to be accurate. Ours is we scrutinize a little bit more." I just know that the two never line up, and usually ours is significantly lower than what their Credit Karma scores are.
Really? I know like obviously FHA has some advantages, but when someone is looking between the conventional and FHA, is FHA like higher fees or more mortgage insurance? What's the disadvantage?
The disadvantage is, for what I've noticed, people tend to want to accept conventional over FHA because FHA is a government loan, so it takes a little bit longer to close. Appraisal is a little more scrutinized, so that they look for more safety stuff. Conventional is a more attractive product because there's a lot less red tape to get through. As far as mortgage insurance goes, it's 85 basis point for FHA across the board, whereas conventional is directly linked to the loan amount, and so how much money you're putting down, what your credit score is, what type of home it is, all that type of stuff. So it's
Kind of got to run the numbers, huh?
yes, that's correct. Yeah.
Yeah, I know. I know when I bought my house, I did a conventional loan, and that worked out pretty well for me. But yeah, I mean, it's nice when you can do like a 3.5% down.
FHA is 3.5%. There are certain conventional programs that you can get for 3% down, but you have to have a certain credit score, and then your income can't be too high, and your debt to income ratio gets capped. It's a program that people have to fit into basically.
With the seller's assist on an FHA, I've seen some people, do 3.5% down, 6% back. So they're effectively putting negative 2.5% down on a house, which definitely helps with the closing costs and things like that for sure.
Absolutely, but that's pretty rare to see in this market nowadays. When I first started, you'd see that all the time, but it's tough to get a full seller assist. But it's possible.
Yeah, I mean, from the real estate agent perspective, we want our clients to be approved conventionally because, like you said, sellers want to accept conventional loans over FHA loans, and it's extremely competitive right now to get an offer accepted. Getting an assist can be tough as well. Definitely makes the offer a bit weaker. Anything else that you think the audience should really know about when they're choosing a loan, what to think about?
Honestly, fill out the application for a mortgage as best that you can. Make sure that you have a loan officer that's going to communicate very thoroughly with you. Express your needs up front. Tell them, I want my monthly payment to be this. I want my cash out of pocket to be this. Or, tell me what my max approved is. Or, just let them know what your goals are up front. And then that way the loan officer can tailor the product, the program, and your approval to what your needs are, as opposed to just telling you the max that you're approved for. It's all about the level of communication up front, and then that way the loan officer will know which loan program to place you in.
Yeah, I think actually that's an excellent point. If you get in touch with the right loan officer or right person like yourself who helps guide people, you can kind of then lay out your situation and they can help fit the right product to your situation. I know like some, obviously you can go to like a big bank or you can go to a mortgage broker and things like that. Tell people what the advantages are of going, let's say, without a big bank and going to somebody like yourself.
So I'm a correspondent lender, which means that my company lends our own funds. We're not a bank. We're not depository. All we are is a mortgage bank. The advantage is that I'm not a salaried employee. So basically I need the deal to close in order for me to get a paycheck. So therefore I'm working from 6 a.m. till sometimes 12 a.m. I'm 7 days a week. As you know, we've done transactions together.
Yeah.
I have a support staff. I have 2 assistants. We have our own processors, underwriters, closers. Everything's in-house under the same roof. The level of communication between us, the clients, and everybody involved in the transaction is phenomenal. We want your business, but not only that, we want you to have an amazing experience. We want you to refer us to your friends and your family members and your coworkers. And when it comes to the loan officers at like a big bank, they're salaried employees and they're working 9 to 5 Monday through Friday. So if you have to put an offer in on the weekend on a Saturday or Sunday, you're going to lose the house because they're not available to you. You have the online lenders who do the bait and switch all the time. They give you the low rate, but then they also give you, a whole bunch of points that they charge you. So thousands of dollars just to lower your rate by 1/8 of a 1/4% never makes any sense. But they try to take advantage of consumers who don't know the difference. Again, you want somebody with a brick and mortar who has a local reputation to uphold. If I start doing a bad job, then people are going to start talking and saying, hey, don't use this person. So I have to make sure that I do a near perfect job every single time. And that translates to a great customer service experience for anybody who uses me for a mortgage.
Yeah, I mean, I can't imagine if you had a salaried realtor working for you. You know what I mean? It's like,
Right.
I think the commission system works really well in terms of motivating people to get the job done, bottom line. So
Yep.
I always want, my buyers to be working with someone like yourself because I need that person to be as invested in the deal as I am and my clients are and trying to get all that done. All right. Well, great, man. I really appreciate your time today. Can you tell me how people can get in contact with you?
Yeah. Listen, just reach me on my cell. So you can give me a call at 484-798-9084, or you can email me at smaloney@nfmlending.com. I'm happy to hear from you. Happy to help.
Awesome, man. I really appreciate your time.
Thank you.